Hello and welcome to the Joinery Business Podcast. My name is Bruce Poling. I'm your host. And today I'm going to be replaying a live session we did in our group, the Joinery Business Hub. It's a free Facebook group. You're welcome to join. And in this session, what I did was I talked about how to read a profit and loss statement. I find a lot of joinery businesses really struggle with understanding your profit and loss statement, just the numbers, the simple cash in, cash out, money left over question. A lot of accountants kind of make this way more difficult than it needs to be. So I've stripped back all of the complexities. I've made it nice and simple to understand. And I'm also going to, in this talk, I'm going to give you two trackable percentages that you need to watch to make sure that your factory is efficient and make sure that your pricing system is on target. So hopefully you enjoy this. And if you have any questions or comments, please feel free to jump into our group, the Joinery Business Hub on Facebook. It's a free group. Just request to join, answer a few simple questions, and we'll let you in. And we can have a chat, and maybe we can get a little bit deeper with it in the hub. Hopefully you enjoy. Cheers. This is just a little soundbite or a little bit of free information that I'm going to do as many Mondays as I can, free to the hub, and just talk a little bit about something that I think might be quite useful for you moving forward, given the conditions that we're in with the virus and getting business back on track. Look, the reality is, business as usual is not good enough. And if we go back to business as usual before this virus hit and before all this sort of slowdown happened, if we go back to the way it was before, very few people can tell me they were happy with that situation in the first place. So we're just getting back on track of trying to make some improvements in your business because that normal was not good enough. If you can't say, we're making 15 to 20% net profit in the business, and I've got a substantial amount of money in the business in the bank, so that there's a bit of a buffer, and all my team is working great, so I can take 3 or 4 or 5 months off if I want to. If you can't say those sorts of things right now, we've got some work to do in your business. You know, you didn't go into business to only come this far. You didn't go into business to work 12, 14 hours a day, every single day, and have no money and no time to spend with your family. That wasn't the reason for getting into business. So here's the harsh reality of it is there are joinery businesses in Australia here in this market that are doing exceptionally well, that are gaining wealth, that are getting time back, that are having these great teams and being able to take holidays. There are businesses like this, so there's no reason you can't have the same. A lot of people just don't believe that because they haven't been able to achieve it yet. So I thought what I'd do to the hub is I would show you guys some of the things, the sort of hot button topics that seem to come out over the week or two, and I'll actually show you some ways to solve those problems. If you're in the hub right now and this sounds like a good idea, if you're watching this live, just type something into the comment box. Say, yep, it sounds good, or it sounds like crap, or whatever you think about this whole concept. Little valuable bites given away every single Monday, or as many Mondays as I possibly can. I'm happy to do it, but I'm also going to ask for some interaction as I'm doing it. I think that's fair enough. Let's jump into this. What I wanted to do is I wanted to just do one little bit of information on your financial reporting. This is one of those areas that a lot of people are a little bit afraid of, or don't know anything about, or your accountant will make this sound like some complicated, magical, mystical beast that we don't really know anything about. So I'm going to share my screen with everyone, and I'm going to show you exactly what your profit and loss is, how to read your profit and loss statement, and also have it mean something to you in your business. Like, your profit and loss statement is a financial dashboard of your business. Imagine driving down the road in a car without a dashboard telling you how fast you're going, telling you what the temperature of your oil is, telling what the temperature your coolant in. Imagine not having any of those measurements in front of you as you drive down the road. That's exactly what people do in business. They have no measurements, no indication of what's happening in the business, just barreling down the road with no dashboard in front of them at all, making assumptions. You know, I think I'm going fast enough. I think the engine's not going to overheat and blow up at me. I think this, I think that. And then eventually, kabloom, you know, something goes wrong, or you get a speeding ticket or something like that. So having a financial report on the health of your business to tell you what's happening. And even if you get a report, a profit and loss statement from the previous month, which is usually what we do, we have a bookkeeper or someone say, okay, today, it's May. We want to know how we went in April. So you have to close off the books, reconcile everything in April, and then have a look at it in May and say, okay, how did we go? And even then it's too late, because that's what we call a lag indicator. It's already happened. All you're doing is you're saying, okay, this is what happened 30 days prior to me getting this report. If you leave it any longer than that, all you're doing is you're delaying either being able to fix something that happened 30 days ago, which means that it's going to repeat every 30 days or every day potentially. So whatever the problem is going to keep getting worse and worse and worse and worse. Or you might have had a great month and you didn't really even know about it. In other words, you couldn't celebrate the win that you had and your culture didn't go up. So there's nothing good about not having a financial report on a monthly basis. There's nothing good about it at all. It's unacceptable in a business. If you're running a business, it's unacceptable to not do monthly reporting on how you went. And the thing is, it's so easy these days. Bookkeeping, if you're using Xero, keeping things up in Xero is so simple and easy. Connect it to your bank account. Everything that flows through your bank account automatically uploads to Xero. All you have to do is approve those payments and away you go. It's actually really, really simple. So having your profit and loss statement is as important as your dashboard in your car. You couldn't drive a car without one. You shouldn't think of running a business without one. It's not acceptable. And I want to just be really, really clear before we jump into this. I'm going to show you a profit and loss report. And I want to be really clear. There's two types of profit and loss reports. I won't get into too much technicality here, but it's important that you know, if you're having someone help you create a P&L report, if you're going into the settings in Xero or MyOb or whatever your accounting is, there's two types of reports you're going to run. One's going to be a cash report. So a cash report in a P&L or any kind of report in your accounting package just says all the cash that actually went into your bank account. There's a revenue report there. And then everything that you actually paid that went out of your bank account, it records that. That's what we call a cash reporting basis. When you look at your business on a month-by-month basis, you don't want to do a cash reporting basis. You want to do what's called an accrual basis. And what that means is we're actually looking at your business as if everything went well. How would the health of your business look? We're not going to look, in this case, we're not going to look at whether you did receive the money or whether you did pay your suppliers. We just want to say, if you did receive all the money that you invoiced for and you paid all the money you're supposed to pay your suppliers, what would the results in the business be? Right? So anything that you invoice for, whether you got paid the invoice or not from your customer, it shows up in your accounting package. So the invoices go in and they show up when you run our accrual report as the invoice reporting. Then when you enter a supplier invoice that you need to pay, it shows up as you should pay the supplier. So when you're doing an analysis, run your P&L on the accrual basis. So if you'd received your money, this is how much it would be. If you paid all your money, this is how much you would have paid. And of course, there's going to be something left over down the bottom, or there isn't, right? So that's why it's important. The other two things we want to look at, of course, are if you didn't receive your money from your customers, that's a cash in, cash out sort of basis. How far out is your receivables? How far out are your payables? Are your customers 30, 60, 90, 120 days? What's the percentage of those? We want to look at that and say, okay, well, if you did invoice, but you didn't get paid for 90 days or 120 days, that in itself is a problem. And that's a project we need to work on. Or if you didn't pay your suppliers and you're extending your credit terms with them, that in itself is a problem as well. So that's the first thing I wanted to say. The second thing is we should also have a general idea of what the work in progress was sitting on your factory floor on the last day of the month, and a general idea on what that work in progress is that's uninvoiced, because that's not going to show up in your invoicing on your profit and loss. This can be a little bit of a guess, but at least if you're putting something in there, we're going to say, okay, well, our invoicing amount was this much, and throughout the month we worked and we worked and we worked. We paid for materials, we paid for labor, and we've got $200,000 worth of work in progress sitting in the factory floor that we haven't invoiced for. It's important to know that you've got that work in progress, because we are looking at sort of a snapshot in time if everything went well and you collected all your money and you paid all your invoices and you actually received the work in progress that is sitting on your factory floor. That's a key element to this whole consideration. Mark, Carrie, good to see you on the line. If there's any questions or anybody else has any questions, chuck them in the comments box. So I can see you guys on Facebook, and if you have a question or a comment or anything at all, yeah, please just chuck it into the comments box, and we'll be right on top of it. Are there any questions or comments about any of that so far? Oh, looks good. Everybody's good to go. Okay, so I'm now going to jump into showing you an actual profit and loss report. Excuse me while I just set up my iPad properly. Okay, so this is your typical profit and loss report. And this particular one that I've got showing you, this is just a sample profit and loss report. I'm just making sure there are no client information on here because this actually was from a client that I worked with. But okay, so a profit and loss report is really, 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 really simple. Don't let an accountant or a financial person make you feel like it is complicated. It is absolutely simple, dead simple. And there's only 3 elements to this. And the most important part about all of this is that you have the total ability to be in control out of all 3 of these areas on your profit and loss report. You know, I say quite often, you'll hear me say this over and over and over again, nobody has a cash flow problem. You'll hear that statement over and over and over again, cash flow. I've got to worry about my cash flow, cash flow, cash flow. Nobody has a cash flow problem. What most people have is a cash management problem, right? We think that we get affected by cash flow. But if you think of this like a garden hose, if a garden hose has a kink somewhere, we go and we alleviate that kink. So the flow through the garden hose is exactly the same here. And there's 3 areas in your profit and loss, or 3 areas in your business that you have total control over. So let's just talk about what they are. First area is income. Now, I know everybody's going to say, well, nobody's paying me on time. But if you think for a second you don't have any control over someone paying you, you should probably get out of business because you've got to collect your money. And it is possible to say to someone, okay, well, if you owe me money and I'm not going to give you the cabinets until you pay me, you have total control over that. You know, you also have total control over you know, trying to collect that money. So don't extend yourself into terms, for example. We don't give terms to anyone. The reality here is that if somebody really wants what you're giving them or what you're offering, they're going to pay for it. So don't put yourself in a position where you've extended terms. I work with hundreds and hundreds of joinery businesses. I ran my own joinery business myself for many years. And one of the biggest problems is that we extend credit like a bank would to our customers without even doing a credit check or without actually even requesting that customer to fill out a credit application. You are extending credit to a customer if you give them work without them paying you. So if a customer is prepared to fill out a credit application, that means you're going to be, so you might be willing to give them a limited amount of credit for a limited amount of time, $10,000, $20,000 for 30 days, whatever it is. Those are your terms. Those are your trading terms. And if they're willing to fill out a credit application, then you can learn maybe they're a good risk or maybe they're a bad risk and not extend those terms, or maybe you will extend those terms. But your income is number one that you have total control over. The second part that you have total control over is your cost of sales. Oh, let me do this in a different color. Your cost of sales. Okay, so this is the second part of a profit and loss statement that's really, really clear. You have total control over your materials, your wages and your production, your subcontractors, which you could negotiate. Costs of sales are really 2 things. They're the materials to make up the item that you're making. In this case, it's probably kitchen or commercial joinery or something like that. Material to build a job. And this is the most important thing, labor to build that job. So the first most important part, or one of the first important parts of this little talk, is that your profit and loss should show wages for production right there in the cost of sales. So many people that I work with have an accountant that don't do this. And the reason for it is because if you just have a business, just a generic business, like let's just say a logistics business or something like that, then there's no labor to build anything. But in most cases, if you set up an accounting package from scratch, I haven't done this for years, but when we did it in the past, the accounting package actually asks you, what type of business do you have? And if you say we have a manufacturing business, which most joinery businesses don't say, because we don't consider ourselves to be manufacturers, but you are a pure manufacturer. If you say manufacturing, then automatically most accounting packages will put these wages for labor and they call it direct labor or direct wages. Okay, so wages for production go in costs of goods sold, materials go in costs of goods sold, anything else that is directly related to making your goods, costs of goods sold. This is often known as COGS. It'll quite often look like this. Costs, oops, I can't remember how to write today. Cost of goods. It's often called COGS. In this case, it's called cost of sales. Somebody else has renamed it. Okay, so that's the second part. And of course, the third part of this is your operating expenses. Okay, so your operating expenses are things like overhead, heat, light, power, and wages of management. Your wages would go in here. Wages of maybe a salesperson would go in here, right? Because if you're paying someone that doesn't manufacture or produce the goods that you're making, you still have to pay them, right? Whether the goods are made or not. So this is the second part down here with operating expenses, right? So essentially money goes in, money goes out here, and hopefully there's some left over. This is what we call gross profit. Okay, so money in here. Maybe I'll clear this off so you can see it a little bit better. Money in here, that's your revenue, income, whatever you want to call it, less whatever your costs of sales was, materials, labor, that sort of thing. And what's left over is what's called gross profit. Okay, so that percentage there, you'll see one of the keys here is that we're running all of these numbers as a percentage against revenue. I'll come back to that in a second. Okay, so gross profit, and then from that amount that's left over, you take out all of your expenses and you're left with what's then called net profit. That is the profit that the business should be making. And again, if we represent that as a percentage against revenue, that's what someone, if I ask someone, what's your net profit percentage? That's the percentage that I'm looking for. Okay, now, just a little sidebar on this. If you're a sole trader, you don't pay yourself wages, then quite often this number down here, this profit number, needs to be less your drawings. Because you've actually paid yourself, but it does not, if you're taking drawings of the business, it generally does not show up in your profit and loss. Your drawings usually come out of whatever profit or whatever forward forecasted profit you might be making. And that's where a lot of people will say, well, I made a 10% net profit. Whoop, well, hang on. I paid myself $120,000. Well, hang on, in this case, I only made $14,000. That's not 10% net profit, right? Any question? We've got 4 people on the line right now. Any questions or comments about any of this? Open for any comments or questions? Is it all making sense? There are all kinds of weird and wonderful ways to make a profit and loss statement. I've seen accountants and bookkeepers do all kinds of weird and wonderful things. It's best if you don't. It's best if you keep it nice and simple. So as I was saying before, whatever this number here is, we also want to have a consideration when we're talking about this report as what's the health of the business. We also want to have a work in progress consideration. The reason for that is because if we look at a business and we say, okay, the financial results of the business, let's just say this is a break-even point, right? And obviously up here is positive, down here is negative. And if we're talking about net profit results, most businesses feel like they go, let's say month by month by month like this. Most businesses feel like some months are great, some months are terrible, some months are great, some months are terrible. The actual reality is when I see this sort of wild fluctuations, really high highs and really low lows, the reality is your business does not actually have the capability to fluctuate that much high and that much lower. The reason for this is because we have not considered work in progress on a monthly basis. So if we think we're doing exceptionally well, it might be because we didn't consider work in progress. So if we think we're doing exceptionally poorly, that might be because we didn't consider work in progress, right? So once we consider work in progress, the line actually has a tendency to look a little bit more like this. Right? You might go down 1 month, but you might also go like this. And ultimately, what we want to do is we want to track. What we want to do is we want to track a trend, which should show. Oops. It should show. If we were to track a trend, it should show something like this on the year, and that should be what we call your net profit trend. Okay, so net profit percentage trend. And if the trend is going down, we know we've got some problems. And what do we do about that if we have some problems? Well, there's a couple things we can do. Number one, we can increase your revenue. Number two, we can improve your gross profit, which means less labor to build your goods. Number three, we can come in here and forensically look over line by line by line by line. And we do this with a lot of clients, or we encourage a lot of clients to do it. Line by line by line by line, you can see that these percentages against revenue are very small. But if you go through these lines forensically and say, what can I do to make an impact on that expense or that percentage of costs on a monthly basis? And you make a 0.4% increase here, and a 0.2% increase here, and a 0.1 and a 0.3 and a 0.5. Pretty soon what you've got is you've got a plus 5% increase on your net profit. Okay, so there's always a advantage in going through all the fine details in your costs. The one thing that most people find is they're in a joinery business. The one thing a lot of people find is your garbage disposal or your waste is too high. A lot of people are having someone come and tip an empty dumpster and being charged for that, and often being charged too much. So there's a few things you can hone in on really, really quickly, but the most important thing really is that you have this report, and I'm going to clear all this stuff off of here. You have this report, and it looks like this, and you have these percentages running down the side here, so that is your dashboard. Even if you don't want to look at the numbers, because the numbers alone don't mean a whole lot. It's the percentage and the variation month by month by month to follow those percentages. And what I'm going to do for you today is I'm going to hone in on two really, really important percentages that you need to track. I'll just pause for a second here. We've got a few people on the line. How are we going? If you're watching this in our Facebook Live, just give me a thumbs up. Tell me if you're picking up what I'm putting down here. Type in a yep, or you're with us, or something like that, so I know that it's okay if it's just me talking to me. That's okay too, but I like to get a little bit of interaction moving forward here. Carrie, Mark, how are we going with this? No questions? Rock and roll sounds good. Excellent. Okay. All right. So, g'day, Mike. Good to see you on the line. Okay. So what you're looking at here on my screen is one of the things that you have total control over, but it's also a really important measurement, and one of the reasons why having this percentage in profit and loss is so important. If we look at your wages for production, this little beautiful little line item right here, wages for production. And you can see with this particular company in, 2016 to 2017, we had a 29.6% wages against revenue. So that means that almost 30% of all the revenue that they took went towards paying their guys in the factory. Like, that's ridiculously high. 30% of all their revenue went to wages on the factory floor. So that is way above the industry's average. That is way above any benchmark that we should set. And we put together a project to say, let's improve this. And the next year, we got them down to 21.3%. So that was a massive improvement on things. Now, what this does, it's a very direct measurement of what your efficiencies in your factory are. The question I get from a lot of people, or the feedback that I get from a lot of people, is, oh, we're custom. Okay, you can be custom, but that doesn't mean that you've got to pay all of your revenue to the guys in the factory floor. If you're custom and someone says that to me, we're custom, we're high end, we build beautiful stuff, price your work accordingly so that you are getting this price up here, so that you're not paying your guys in the factory 30% of all your revenue to build your work. You know, if your work is custom and it's high end, you should be paid properly for it. The best businesses that we work with are 20% or below, the custom guys as well, the high-end custom guys. Now, we really push this hard, because if, as a manufacturing entity, as a manufacturing industry, which is what joinery manufacturing is, if we don't take on how we're going to become more efficient, if we don't really want to talk about taking waste out of the process and, you know, getting our labor bills down, I'm not saying getting rid of the higher skilled guys necessarily, but yes, where we don't need them, get rid of them. But whoever it is that's running your production, let's make it easy for them. Let's make it so that they're not spending time walking around, you know, looking for things, or rebuilding things, or making defects all the time. And when you do that, there's a clear indication on your profit and loss statement to say, hey, we've made a pretty substantial improvement here. So that's number one. You've got to get your wages for production clearly identified on your profit and loss and represented as a percentage against revenue. The second thing is you need to separate your materials, right? Because your materials are a direct representation of how your pricing system is going. Okay, so in this particular case, this business was showing a 36% against material, and the next year they actually slipped back. We took our eye off the ball here a little bit. Their pricing system slipped back and it went up to 44%. So to give you a couple of targets here, you should be 20% or less in your wages against production, and you should be, now this is, keep in mind, this is in normal situations, 40% or less material against revenue. So you just add those two up. If you were 40% materials against revenue and 20% wages, that's 60% of all your revenue goes towards those two things. That means that you've only got 40% left over to pay other things, right? So there's not much left over, right? And that's why it's so important to keep everything tight and make sure that all the areas that I'm talking about, I've only talked about 2 areas here, make sure that all these areas are getting better and better and better. Our best clients with wages are 15% wages against revenue, and material is getting down to around 35%. So that's our targets. Hopefully that's been some help to you guys. If you have any questions, I didn't tell you how to get your production down. That would take a little bit more of an extensive conversation. And if you're interested in joining one of our programs, this is exactly what we do. Obviously, this is a target, this is a goal, but in order to reduce your wages in your production, to become more efficient, there is a massive outcome for this. The other outcome, obviously, is that if we have actually helped you achieve a 10% efficiency rate improvement in your factory, we've actually helped you improve your income by 10%. So if we get you 10% more efficient, in other words, each job takes 10% less time to build, what that means, very simply, is that you've got 10% more time in 12 months to do 10% more work. So you have 10% more revenue. Doesn't mean that the jobs, you stop doing something for that 10% of the time. It means you keep ticking over, and the jobs that are going to happen into the next year now happen this year, and you got paid for them. So that's a direct 10% improvement in revenue. So if you would like to learn a little bit more about how to improve your labor in your factory, or how to increase your materials, your material percentage, in other words, having a better pricing system and winning the work rather than trying to discount, these are the results that our clients get. Just send me a message, put a comment in the box saying, yep, hook me up, or something like that. You can book a call with us. the Joinery Coach website. You can go to the wealthyjoiner.com as a landing page. There's so many ways. Just have a chat. We don't try and sell you anything. If you're not a good fit for the program or it's not for you, that's cool. But sometimes just a quick chat and we can help you solve a problem, or maybe it's more interesting and you want to learn a little bit more. Don't feel like we're going to try and sell you anything. It's just a conversation to begin with. But obviously the results are worthwhile. So hopefully that helped you a little bit. The main thing here today is I wanted to make sure everybody was really clear on your profit and loss. You need to have your profit and loss at least on a 30-day cycle and run it accrual, and make sure that you look at it like your car dashboard. It's not negotiable. It's got to be done. Otherwise, your business is going to be suffering, or you're going to be unnecessarily suffering when you actually did some good work and you didn't know it. Cool. All right, guys. Thanks for attending. Hopefully that's been some help. Even if you're not watching this live, if you watch the recording later on, please feel free to put some comments in the box. Cool. All right, we're going to wrap it up. Thanks, guys, for attending. Again, we're here to chat. Have a great week. Peace out.